What is up, everybody? Steve here. I hope you're doing well. I came across an article about a couple in Miami. Their mortgage payment went up $323 and people are freaking out. I did a video on this, or a few videos on this, mentioning that people need to pay attention to really what they got themselves into, because there's certain things in your mortgage that will adjust even if you're locked into a 30-year, 15-year fixed mortgage rate. So we're gonna go through that today, and I'm also gonna show you exactly how you guys can avoid this, or at least be prepared for it. And if you know anybody that's looking to buy real estate, or they might be in this position, please share this video. I'd greatly appreciate it. So when you take on a loan, there's two main components. The first component is your principal and interest. Now, if you took an adjustable rate mortgage, which you've probably seen other videos that I put out, highly suggesting that you guys do not take this type of loan unless you guys are more savvy in a sense, and it's going to be more of a short-term play, like you're flipping a property. But for most of us, if you're locked into a 15 or 30-year fully amortized mortgage, you're going to have your principal and interest payment. Now, that payment is going to stay the same for the duration of the loan, so that's not what I'm talking about. The second component is what's called your escrow. So your lender is going to have a certain amount of money that's kind of an estimate for escrow. And what's included in that escrow is primarily your real estate taxes and your insurance for your property. Basically, your lender is going to want to make sure that there's enough funds to pay that on your behalf every single year, and they want to make sure that you guys have more than enough funds in most cases to pay that, because they don't want to necessarily have to come out of pocket or do what's called forced insurance against you on your property for non-payment of insurance. So the escrow part of things is where things normally change, and it normally changes usually after the first year of getting a new mortgage, and a lot of people get sticker shocked in this. And again, when your lender is underwriting and providing your good faith estimate, they try to do their best in terms of giving you an analysis of basically what you can anticipate your principal, interest, taxes, insurance, everything's gonna be in your monthly payment. Now, the problem that we're facing in today's market, especially in the state of Florida, is the rising real estate taxes, as well as rising insurance costs. So I'm gonna bring you guys through some examples, and just to give you an idea of what could happen if you guys got into a mortgage and you're starting to see that all of a sudden, you know, you're used to paying $1,500 a month. Now it jumped up to $1,800, and you're asking yourself why. So let's dive into this real quick. So hopefully you can see this here. We got a prime example. So we got a $375,000 loan at 5% interest, 30-year fully amortized loan. That's going to be a principal and interest, which is going to be fixed at $2,013. Now, the area that's not going to be fixed is your escrow. Your escrow is, again, the amount that the lender is going to charge every month against you guys for your insurance costs, as well as your real estate costs. So if, for example, you are anticipating $2,400 real estate tax bill, and you're anticipating that, and anticipating a $2,000 insurance bill for your annual premium, and that goes up, they're going to adjust that escrow. That's where that change is coming from. Now, in the state of Florida, we have what's called the Homestead Act, as well as Save Our Homes. So what happens is, a lot of times people will get the MLS report from a real estate agent, and they're going to look at what the taxes are for that property. And unfortunately, they're going to see a tax bill in many cases that's a lot lower. So if somebody homesteaded their property, meaning they're going to live there full time as primary residence, and they homesteaded that property years ago, basically we have what's called Save Our Homes, where that real estate tax cannot go up more than 3% per year. And somebody could look at that MLS report, look at the old tax bill or the most recent tax bill, and look at that tax amount and say, wow, the real estate tax on this property is cheap. It's $1,000 a year. Awesome. What they're not taking into consideration is that tax basis will basically be come current when they review the new tax basis. And this is happening not just in Florida, but across the United States because of the pandemic and what the government has done in terms of, you know, the bubbles that they've put us in. And that caused a lot of appreciation for real estate. But what comes with appreciation is a new tax basis, which is going to be higher real estate taxes. So I always recommend when we're working with clients that in the state of Florida, you usually want to run your taxes at 1.25 to 1.5% of the purchase price to give you a better idea of where your new real estate tax basis will be. And then obviously if you homestead, there's certain exemptions in the state of Florida that you can actually bring that tax basis down as well. So highly, you know, a little tip for you there. I highly recommend that you guys check into your local zoning, your state, see if you guys have any homestead exemptions as well, where you guys can get your tax basis a little bit lower. Insurance is really out of everybody's hands. I mean, you guys can shop around and try to bring that insurance premium down, but you know, good luck on that. And then other variables that's not necessarily talked about, HOA fees in the state of Florida right now. So in condo associations like one, you know, that we're in right here, especially if it's close to the beach or whatever, especially after Hurricane Ian, a lot of those premiums for insurances are going to be going up as well. And then everything, all expenses, management fees, employees, everything is rising. So HOA fees are rising as well, and a lot of people are not anticipating that. Now, HOA fees are not necessarily escrowed in your mortgage, so that's something you pay outside of your mortgage, but that's another cost that people, some people are just not prepared for, unfortunately. And then you have other things like repairs, you have electric and gas, as well as internet. We just got an internet bill in our other place that went up $3 a month. Not the biggest thing, but the thing, they all start to add up as well. So, for example, in this situation, based on a tax bill, $2,400 in insurance, $2,000, and the other variables for electric, gas, and everything else, you're at a monthly of $3,030. And then if everything increases, I don't know if you guys can see that well, I apologize for this, but if everything increases, your real estate taxes, your HOA fees, your insurance, your electric, your gas, all that increases, based on this simple analysis or simple example, it's $233 per month. And now that's also not taking into consideration repairs. A lot of people should budget a repair item for deferred maintenance, especially if you know that your HVAC systems, you know, more than 10 years, your water heaters more than 10 years, or whatever the case is. You want to have a reserve budget, maybe even a separate bank account where you're putting maybe, you know, $100, $200, $500 a month into for unnecessary or unforeseen expenses that are going to come up in the future. It's best to just have that reserve account in case something goes out. Then you have that cash instead of not having that money, and then you got to tap into credit card debt and put yourself into a further worse position. But I want to bring some light to this because I think that a lot more people, we're seeing it here locally as well, a lot more people are kind of getting sticker shock, and ultimately it's going to force certain people to sell their properties and bring more inventory to the market. So anyway, I appreciate you guys. If this helped you out and somebody else could use this video, please pass it along, and I'll see you guys on the next video. Thanks for being here.